My target is to get to 7% of the operating company's holdings in crypto and
Oh,
in equities of cryptos by year end. But you would do this because let me address the ESG issue, because you brought up three different elements there. So ESG issue has not gone away. It's one of the reasons that major institutions are waiting for a resolution to it. And there is one emerging, and it's simply this. There are many pools of capital being accumulated to develop mining operations in places like Western Texas or in the Nordic countries, where they can use a combination of solar and wind to mine coin and provide electricity for the grids in those regions. And the idea there is along the Hut 8 line that Jordan mentioned. Hut 8, one of the reasons I own that stock is that the CEO there, a woman named Jamie Leverton, has committed to her shareholders that she will keep those coins that she mines sustainably on her balance sheet. So an indirect way for me to own the coin, knowing with certainty it passes my compliance committee that is looking at ESG issues, sustainability issues, ethics issues, and no different than many large institutions or sovereign funds. And indeed, her stock trades with the volatility of Bitcoin. So it's an indirect way of solving that problem. And there's at least 4 or 5 other projects, one of which I'm getting involved in, that's going to mine sustainably in Western Texas. So I think that resolves itself for the next 30, 40, 50 years. And so we'll see more and more institutional involvement. In order to mine the efficiencies and productivity that decentralized finance promises and cryptocurrencies promise to reduce friction and cost and be a global solution for a lot of financial services, you got to be part of it. So if China wants to just do their own thing, that's fine, but they won't get any participation from anybody. I mean, the reason I would never own that coin is I don't know who's watching, and I'm pretty sure it's going to be the Chinese government. So why would I let that happen to any of my assets? So I think they're going to get a lot of pushback, and I'm just one voice. And I'm sure they'll come around at some point. My attitude about owning crypto and the whole sector is I have a discipline of diversification. I'm forced by mandate here to never have more than 5% in any one stock. This is on the equity portfolio, or never more than 20% in any one sector. And there's 11 sectors in the S&P 500. I consider crypto to be the 12th sector. It hasn't been deemed that yet by the S&P, but it's coming. And so my view is, how do I get diversification? Well, Jordan's company, Hold is the symbol, I'm a shareholder, is diversification. It's a series of assets on the chain. So why wouldn't I want that? To me, it's just, I'm investing in software, productivity software. I invest in Google, I invest in Microsoft. Why wouldn't I invest in Immutable Holdings? Same thing, they're all the same to me, and that's how I'm going to treat it. Well, the expectation when you own the equity of the company is that we'll become more and more efficient at mining coin. And it'll do a better job at doing it, and perhaps do it where there's a lot of value in a sustainable way. I cannot own coin where I don't know the provenance, because I also have to serve institutions that are not allowed to own coin that isn't sustainably mined. They have sustainability committees. We haven't resolved that yet. So rather than get myself in a conflicted situation, I put the value in owning the Hut 8 stock. And I've been buying her stock for a while now. So my whole point is, I don't need to own Bitcoin natively only. I can own it in other ways. And I do own some native coin that I know its provenance. And so for me, I don't need the resistance and the headache and the compliance officer barking at me. I don't want that stuff. And I don't need it, because I have other businesses that I have to be compliant in all the time. So I'm no different than many other institutional clients that are concerned about this issue. So there's value in many different ways. Yeah, it's a very vocal community, and that's okay. It's a lot of the people that were the early founders feel they have a proprietary relationship with the community or with the assets themselves, and that's okay too. But if you really want to see Bitcoin at $1 million a coin, this has to be ubiquitous across all different buyers, whether they're involved in crypto today or not. And the potential to get there and even see Bitcoin at 100,000 by year end is going to be an expanded market. So, my view is there are many, many, many people that have not yet participated in crypto that over time will become more comfortable with it. Certainly Gen Z is very active there, millennials, and even some baby boomers now see it as a store of wealth, and they're allocating some portion of their net worth to it. But at the end of the day, I look at it and say to myself, what drives value in a market is disruption and enhanced productivity. And so if you believe you can get that out of cryptocurrencies or decentralized finance, it will create value. And you heard a use case that Jordan just referenced around watches. Let me give you some more metrics to that, because I'm very involved in the protocol to develop a standard for watch NFTs. Every year, there are $20 billion of transactions in new and used watches. They trade from one hand to another. They move from one state to another. When you have a very valuable piece, such as a Patek Philippe or a vintage Rolex or an FP Journe, which is probably the hottest watch in the world right now, before you purchase it in the secondary market, you have to get it authenticated, because you don't know with certainty that it's real. Have it looked at by a representative, either the maker or an auction house that has the expertise to authenticate it, send it back to Hong Kong, and then do the transaction. That is incredibly inefficient. And I've gone through that for decades as I've built my collection. And I'm fortunate to know the world's largest watch collectors. They have the same struggle, the same challenge. Collectively, in conjunction with some of the authorities that oversee horology, we're working together to try and set standards that then we can, right at NFT.com, start to provide individual NFTs for each collector's collection. I want every one of my pieces to have an NFT associated with it that authenticates it into my estate. Even my insurance company wants that. Instead of having to go through the arduous process of having it photographed and all of the paper accredited, I can have all that encased inside of an NFT and simply send it to the insurer, and I'll get a discount rate if I can do that. That's what they've told me already. So there's so many use cases for NFTs where the physical asset is tied to the digital for the sake of authenticity and efficiency. That's where we're going. It already happened to me. My watch that I wore, the steel white-faced Daytona with the red band, went to auction last year at an extraordinary price. And I only wish that I had the NFT to that watch, because I'll never have it again. Now, I'm fortunate I was able to buy another one, but that watch was on Shark Tank for 12 years. That was the red band watch. And it has tremendous value with fans. And many others have asked me, do you have a picture of it I can have? So that's what the NFT will be. My plan is to go back to the buyer. It was a charity auction for the One Drop Association, and ask him if he would allow us to make an NFT of that, because the demand's insatiable for that piece. Other stablecoins, obviously, USDC included, Tether.
Yeah.
The regulator has spoken on this issue just only 3 weeks ago, regarding the concept that stablecoins are being treated like money market funds. When you, for example, sell your stock in a traditional brokerage account, very often you're swept into a money market fund while it waits in cash, and maybe you're yielding today 23, 24 basis points, but that is backed by dollars and very short duration government credits in most cases. What I anticipate happening, because you're right, the reason that, let's just take USDC, one that I'm more familiar with because I actually use it corporately, managed by Circle. They've been growing 10x every year. They started with 100 million, and today there's over $30 billion worth of USDC. And yet it hasn't been adopted institutionally yet. There are some high net worth family offices, hedge funds that do stake it or lend it, as you suggested. And the current yields on that are around 5.8 to 6.4%. And I know that because I just signed 3 more stakes this morning, and I'm using the Circle platform to do that. Now, it's not a huge amount of dollars, because we're still in the, I was one of the first business accounts that they opened as a pioneer to help get that going. And it took me 6 months to get my own internal compliance department on board, and another 2 months to get my external auditors to sign my statements, so that then I could fulfill my obligation to regulators in various geographies where we're using this strategy. And so we are nowhere yet on stablecoins in terms of it becoming an institutional product. The most likely scenario, in my view, and it's a personal opinion, is that Circle, who has the 30 billion, will end up being licensed as a bank and have to comply the same way banks do to their money market accounts. And that would solve a lot of problems. It would allow me to go to a full weighting of USDC. Right now, to get it through my compliance, I have to treat it like a stock. It's not a stock. It's a proxy in the US dollar, and yet I can't get my own compliance people to agree. So We're very nascent in this process, very, very early. But the fact that I'm going through all of these headaches is because you're right. I can make 6%, and I can't do that anywhere else. And I have to make something over 2.1 because that's inflation. So there's a lot of interest here. I think everything to do with the internet, whether it be a miner, whether it be Circle, whether it be Immutable, whether it be WonderFi, another recent investment of mine in decentralized finance, these are infrastructure plays for the long term. Now, either you believe in cryptocurrencies and you believe in decentralized finance, you believe in what an NFT is, or you don't. But if you do, then you have to make an allocation decision. And really, what I'm hoping to have happen is the regulator regulates, because I don't think that, the genie's out of the bottle now. When you got $30+ billion worth of stablecoin out there in just one USDC name, that's a huge indication that there's institutional interest that yet haven't met demand. And so the bottom line here is, this is software development. The whole thing is software development. What makes the country competitive is technology, which is primarily a combination of firmware and software development. The regulator knows this. We want to lead the charge in decentralized finance as a country. We want to lead the charge in deciding which of these currencies and payment systems go international. We want to be the developers, and we want to maintain the pace and the innovation and the disruption. We certainly don't want the Chinese doing that, so it's a competitive race. They've taken a shot with their own currency, which I mentioned I would never own. But at the same time, the rest of the world still uses the US dollar as a settlement vehicle. If we can make a digital version of that, in USDC or something similar to it, that will become the standard globally. No, Immutable Holdings I've invested in as an infrastructure play through their equity, and inherent in the value of that equity is what they have on their balance sheet. I also own multiple positions in various coins and tokens and other chains, and level 1, level 2s. What I've decided to do with this situation, I recently got involved as an investor and then a paid spokesperson for FTX, is I was looking for a platform to manage all these assets on that I could get my compliance department on board for. I described what I went through just to get USDC on side with Circle's infrastructure. I did the same thing with FTX. And so at some point in the near future, before the end of the year, what I don't want to be accused of or ever be associated with is this idea of promoting this, some coin that is unknown and very thinly traded and all that kind of thing. I don't do that. I'm an investor. I buy these positions for long-term reasons, and I really don't rebalance outside of just keeping the weightings under 5% or whatever. And so I've decided to disclose my holdings all at once and say, here's what I own. I own a lot of things now, and then just keep it transparent, because I don't like a lot of this cowboy stuff that goes on in the crypto space, promoting this or that you've never heard of. That's day trading to me versus long-term, enhancement of productivity. Again, I look at all of it as software. I invest. I came out of the software industry. I understand it. I've been involved in it my whole career life. But now I'm looking at it in terms of enhancing productivity in all kinds of different sectors. And it is my stern belief, and it's a personal opinion, and the reason you would want to do this, my target is to get to 7% of the operating company's holdings in crypto and in equities of cryptos by year end. But you would do this because you believe at some point that the 12th sector of the S&P will become crypto and decentralized finance. I believe that. I'm not saying it's going to happen at any time soon, but there's 11 sectors in the economy, including real estate, which was added recently. And I think crypto will make it there too. So you're investing or betting, if you want to put it that way, that this will become a new sector in our economy and it'll be here forever. I think the value of Bitcoin will continue to increase over time, and maybe will beat the indices, the traditional equity and fixed income indices. And that's why you should, if you consider that, have some allocation to it, which would not be a bad idea. And I don't think you have to bet the farm and only own Bitcoin. You can own a lot of different coins, tokens, and infrastructure equities, as we talked about. But having no allocation to it at all in a portfolio, in an operating company like mine, is to say that you don't believe in any of it. And I'm simply not that person anymore. I was very skeptical at the beginning, but as things changed and the regulators changed and became more open to it, so did I.